Hello friends, good morning to Banking Simplified as 123. I am Suman Saurav, and the topic that we are going to discuss as part of Banking Simplified today is amortized loans. So what is amortized loans? It is also called reducing principal loan, installment. Each and every installment for this type of loan consists of principal as well as interest. Each installment amount is fixed. Interest component in the installment keeps on reducing while the principal component keeps on increasing with time. And the best example of amortized loan is home loan. Now, what basically happens? So consider you are taking a loan of rupees 10 lakh and you are saying to the bank that okay, I want to repay my loan in 20 years. So bank will ask you that okay, we are going to offer you a loan, say at 10%, at a rate of 10%, and the schedule in which you have to repay will be monthly schedule. So as it is for 20 years, totally you will be having 240 schedules. The rate of interest for the loan is 10% annually. That will make it 10 by 12, which is 0.83 roughly, 0.83% monthly on a roughly basis, right? So depending upon this calculation, means your principal becomes 10 lakhs, rate of interest is 0.83 per month or 10% per year. Tenor is 20 years or 240 months. Depending upon this, they will calculate the interest for your loan. They will calculate the installment for your loan, and they will build a installment structure or repayment structure for the loan. How that particular thing is done. So let's have a look at this particular Excel. Here I'll just enter the numbers that we have discussed. So loan amount that I'm entering is for 10 lakhs, right? So it's 100,000, 1 lakh. I'll just add one more zero. Yeah, it's 10 lakhs now. Rate of interest that we discussed is 10%. So on monthly basis, it comes to 0.8333% or 0.0083333. That's the value. Tenor we have discussed is 20 years. So the number of installment that we are having becomes 240. Now here depending upon this calculation, your repayment schedule gets built. So what happens here is like installment becomes here is the formula that we are having, which is PMT Excel built formula, PMT C2, which is your monthly rate of interest, comma C3, which is your number of monthly installment, comma principal, but it's negative side of principal because we are taking the amount from the bank, and the fourth component of the formula is 0. So if you do this formula, it will give you your installment. Now what happens if you calculate like how installment for the entire tenor will remain the same. So I'm just keeping this amount as fixed for installment amount. I'm just using that formula as I'm just keeping this particular value for each and every installment. Now for the interest part, what happens is like how much interest is getting calculated for the first month. My balance here is the entire principal, and it's 1 month, right? So my monthly rate of interest is 0.0083. So if I do this calculation, A into B, that gives me your interest for the first month or interest for the period of 1 month, which comes to 8333.33. So how much means I'm paying for the first installment? I'm paying 9,650 rupees, out of which 8333 is my interest. How much is my principal? It's just a basic calculation like A minus B. So installment minus interest becomes my principal. So that gives me a principal of 1,316. So how much principal is left out of 10 lakh? Out of 10 lakh, I have just paid 1,316 rupees as of now. So the remaining amount that's left there is 9,98,683 rupees, right? So for the next tenor or next schedule, my balance amount becomes this remaining amount, which is 9,98,683. Installment amount, as we have discussed, is fixed. So again we will calculate the interest for the 1 month, and which comes to 8,322, depending based on the same formula. So here the principal amount gets increased, like principal amount is like again 9,650 minus 8,322, that gives us a value of 1,327. So if you see, our interest amount has decreased from first installment. Principal amount has increased a bit from the first installment. This calculation keeps on going. Now, as we have discussed that our loan is having 240 schedules, we will look till 240. This installment number should be 240. Beyond this, whatever is there, that is not of use for us. It is just getting dragged because of the Excel formula that we have used. So I'll just delete the part whatever is there after. I'll just clear this particular part, and then we will focus upon this thing. Now, the best way to validate whether your structure, loan structure, or repayment structure, that whatever you have got is correct or not, is the remaining principal at the end of your tenor should be 0. Now, if this value is 0, means the structure that we have derived is the correct one. Now, how much interest you are paying totally? If you look at this, there are some horrible numbers that are going to turn up. So totally you have taken 10 lakhs rupees, while you have paid 23,16,000 rupees to the bank. 23,16,51 rupees to be precise. Out of that, how much is your interest that you have paid? It's 13,16,051 rupees. And how much principal? Principal should be exactly the same what you have taken. So it should be 10 lakhs, right? So these are the summary I have just taken. The sum that I have just taken is like total interest that you are paying is your 13,16,051.95 rupees. Principal that you are paying is entirely your 10 lakh, and the amount total that you are paying is the sum of these two. Similarly, if you change the numbers here, we will get the revised number. Like say rather than 10 lakhs, I am taking a loan of 15 lakhs. I am changing it to 15 lakhs. So, and rate I am changing it to 9%. So this gives me for the revised loan, my new schedule. The only change that we need to do here is like if we are changing that loan tenor. If we are changing the loan tenor, we have to drag our formula to the number of tenors, that monthly tenors that we are going to have. See, if I am reducing my tenor to 15 years, the number of monthly installment that we are going to have is 180. So we need to have it till 180, and remaining things we can remove. But if we are going to increase our tenors to say 30 years, we need to increase our rows till next for the next 120 rows, because it's there till 240 rows, right? So yeah, this is how we calculate our amortized loans. Hope you would have liked it. If there is any confusion, you can go through the video again. If there is still some confusion, you can certainly write me at Banking Simplified as 123@gmail.com. Thanks for watching it. Hope you would like the video. Please share your feedback with me so that I can improve it for the betterment. Thank you.